Yo, what's going on, everybody? It is Thursday, November 2nd. Oh, I got the yapping dogs and I got the helicopters flying over. So I get the double effect today. All right, everyone, we had a pretty good rally today, which does not surprise me for a number of reasons. First of all, I told you what was it, back on October 17th or something like that, 18th. October 17th, I said that was the bottom. And the reason why I said that was because I already saw that the worst of the tax strain, that October 16th tax strain, that was over. We were already starting to improve. And I said, when the government balance went back into deficit, which is what we want to see, right? Because a deficit equates to the net addition to the financial balances of the non-government, us, the economy. I got to repeat that all the time. I know you guys know it, but maybe there's some new people here. I got to repeat it all the time. So I told you that was going to happen. I told you we're going to be positive at least up until November 15th. November 15th is going to be another big quarterly interest payment. Then probably we get back into some, volatility. December 15th, we get a corporate tax payment, another tax drain. And then we really get into a much more sustained bullish environment towards the end of December, all the way into February 15th. And of course, like I always do, I give you the two-tier picture. The overarching picture is bullish because here's another thing I repeat almost every day. The government is spending $7 trillion annually and running up like $2 trillion deficits, and that's positive. Somebody asked me yesterday in a comment, "Hey Mike, do you really think that you want to have an economy that's just based on the government spending?" My answer to that, and I did respond or reply to the person who commented. My answer to that is governments are involved in every economy around the world to some degree or another. And it's not just about spending, it's about the legal system, it's about enforcement of contracts, it's about trade policy, all different kinds of things. But the real answer to that is, if a government is going to impose taxes which can only be settled in its own currency, then the government has to spend. It has to spend more than it takes away in taxes. Otherwise, we don't have the taxes. It has to spend at least what it takes away in taxes. Otherwise, we don't have the money to pay the taxes. And because most people want to save an additional amount beyond what they pay in taxes, necessarily the government spends more than it takes away, or somebody does anyway. If it's a foreign entity, like these countries like Japan and China that run trade surpluses, then it's the foreigners who are the net spenders. But in the case of the United States, it's the government. Now, it's not even the government's like, oh, we got to spend more than we take. We know that's not true because they rail against this spending constantly in Congress, and nobody in Congress understands, the finances of the federal government and how it works. They don't understand the monetary system. So it's not like they're all sitting there saying, oh, we got to spend more than we collect in taxes because we have to provision the non-government with the currency in order to pay their taxes and maybe to have a little left over for their retirement or whatever. That's not how it works. It's not like it's planned out that way. It's the non-government, us, the economy, that demands the higher spending in one way or another. Like, we might not consciously be saying And I know we're not, because most people don't even understand this. We're not consciously sitting here saying, you got to spend more than you tax. Like most people actually believe the opposite. Okay? But collectively, what do we want from the government? We want a strong defense. We want infrastructure. We want a legal system, right? We want environmental stuff. We want some health care maybe here and there. We want some education maybe. So, I mean, these are things that the electorate, I mean, we go to the polls and we vote on these things. And so, like, collectively, we're demanding things from the government. So it is us that demands, you know, the higher spending, even though most people, if you ask them, would say, oh, we want the government to spend less. We want the government to, you know, to balance its books like we have to do at the kitchen table every month, you know, all that bullshit. So that's the answer. The government must spend if they're going to impose taxes that can only be settled in the government's own currency. It's not like, Mike, do I want the economy to be driven by government spending? But maybe yes and no. I mean, I happen to think like we spend a lot on defense. I think the spending could be definitely, the composition of the spending could be different. If you ask me personally what I would like to see, I mean, I would like to see more like infrastructure and domestic investment and healthcare and education and stuff like that. I'm not so crazy every time, you know, there's always money for a war or a $15 billion aircraft carrier like that. And you know, you see the roads and the bridges and the infrastructure crumbling, and it's like, oh, we can't do that. But anyway, I'm digressing into another topic. Let's get back to the market. So yesterday we had a very big positive flow day, and I told you that was going to happen because yesterday was November 1st. And you get that every first of the month. I've been telling you guys, like first of the month, that's when you get the Medicare, the Medicaid, the military pay, the veterans benefits, the disability, all that stuff. So it was almost 112 billion leading flow yesterday, and it was like 77.5 billion net. I mean, that's big. We haven't seen a net flow like that since June 30th. So that's big. It puts the deficit now for November right away at 77.5 billion. Okay. We still got a quarterly interest payment coming up on November 15th. I think I just mentioned that. Also, the good news is that the year-over-year deficit, I've been talking about this. There's been a gap in that year-over-year. Like we're below, the deficit right now is below where we were at this time last year. But the good news is, and I've been saying, let's watch the trend of that. It's narrowing. That's good. And I said that was going to happen because I've been seeing the daily leading flows now in this fiscal year, in October, have been higher than last year. Okay, so I kind of guessed that year-over-year differential in the deficit was going to shrink, and it's definitely shrinking. That's good news, because I said we need to see that differential go away or even be surmounted this year, and then the market's going to make a new all-time high. You had a lot of people saying the market's going to take a long time to ever make a new all-time high. I was not one of them. I just said as long as, you know, we don't get a government shutdown on November 17th, the market's going to make a new all-time high. And we'll come back to this when it does, and I'll say, you know, this very serious person on Wall Street said it wasn't, and this very serious person on Wall Street said it, and this very serious person on Wall Street, I said it was. Just like all the other things that I said. And again, I always say, I'm not trying to pat myself on the back. I'm not trying to sit here and, you know, brag about my calls. I hope they speak for themselves. I'm just saying, this is what I look at. And the reason I look at it is because it tells you what's going to happen to the economy. I said the economy was going to slow down because of the student loan payments. But it's going to be a 1 quarter. I'm saying this now, before it's even forecast or before we even see the numbers. I'm telling you this right now. As long as we don't get a government shutdown, it's going to be a 1 quarter slowdown. And it's not going to be a recession, and it's not going to be negative. They're going to go from 5 to 2, something like that, GDP growth. It's okay. And then it's going to bounce back next year. So, it's good. Oh, here's what I was going to say. Sentiment, I was looking at the AAII weekly sentiment survey this morning, which I send out a whole breakdown and analysis of that to my subscribers. That got very, very negative. Very, very negative. Bearish level, I think, was the highest in like something like 8 or 11 months or something like that. Everybody got bearish. Really super bearish. They all sold at the bottom. And last week I was telling everybody, right? What was I saying? I said, you got to buy this dip. You got to buy this dip. You got to buy this dip. And once again, and I talked about this last week too. I said, once again, you see, as a matter of fact, I think I had some, the titles of my videos were like, are you panicking? Are you scared? Remember that? Are you frightened? A lot of you said, no, you're not. Some people said, no, I'm not because I'm drinking. But that's what happened. That was a bad time to be selling. So that's the update for today, folks. I just heard somebody ring my doorbell. I got to go get it. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye.